Hey, welcome back. It is 3 o'clock on the 7th. We've had a sell-off day. 61 on the SPX highs today, all the way down to 60.24, but a 75, 76 point move to the downside. Nothing to sweat. I'm actually looking at a little trade, the little engine that could. I don't know if I'm going to get this butterfly spread filled today. It's only, I'm looking at 50 cents. It's only offering 10. Probably not going to get filled, but I'm really curious if we do have another flush lower. So I am going to look at another quick trade here around that 60.50 or 60.55 area. Let's see, maybe a 60.60. Let me go to a long call fly and see if I can get anything worth trading here. 50. Nope. 15 cents. Ugh. Go wider. If I'm going to go that wide. No. Bucket of yuck. There's just not enough time left. 55 minutes. I'm not getting what I want. It'd be better off doing a bear call spread. So if I wanted to sell a call, buy a call, and that's not an awful trade if I think we're staying below. I mean, 50 is just a little bit in that liquidity spot. I don't love 60.50 because I'd be right here. If we just have another, jump to the upside, we could just range. So that's probably not the smartest trade. Calling the bottom right here, probably not the smartest trade. But I'm just dabbling. I've basically talked myself out of trades today, which isn't a bad thing. I just want to, not do anything silly. Could we stay? Let me see how high up I could go at like 60.80. Nope, it's just I'm not going to get any premium for that. Just looking at a late condor. It's fine. I'm not going to take the trade. I'm looking at a trade here to manage towards the end of the day. This trade is a little iron fly that is currently up around $5. This trade is sitting right on the cusp of some risk, and this trade is sitting right on the cusp of some risk. So as long as I don't lose much, I'd like to see price go up just a little bit, and this one should be closing out for a nice little cash settled gain, which hopefully is going to be around like $10 or $11, and then the other two just don't lose a ton. So I'm going to keep a close eye on those. The net position for all of them, it's a little awkward, kind of a little Quasimodo strategy when I put them all together, but I'm just monitoring this position to see if it stays above around 60.30. Max profit would be around the 60.50 level, but for right now, this one could turn out to be a really nice profit trap for the end of the day. So I'll keep a close eye on that. Had a good week overall. I just posted this. I mean, I had 15 winners and 2 losers. Winners included trades on SPY, Snap, Palantir, EA, SPX had a lot of trades with daily profit play service. PayPal was a winner. Microsoft was a winner. And it looks like CMG and AMD are going to be 2 losers on some small option trades for earnings. AMD, we just didn't get down low enough. This is an expected move of around $12 and only moved about $5 or $6. So that was a lackluster earnings report as far as volatility goes. And then Chipotle literally went nowhere. Over the last few days. So I'm going to eat that debit, and I'm going to eat the AMD debit. No big deal. So I'll take those 2 losers. That's a drop in the bucket compared to the gains this week, and just continue to fight the good fight. So not too shabby. We're live. What do you think, Joey? What am I doing? How would I post a recording? If I post a recording, I'll say, this is a recording. Come on, man. I'm live every day. That's crazy. These final hour sessions are live every single day. I would post in my YouTube channel. It would say video update if I'm doing a video. Okay, so that's where we're at for the day, the week. Let's just do a little tail of the tape so far. I also had a trade running on Microsoft. Grabbed a little bonus credit today, which was kind of nice. This actually wasn't a huge trade, but I turned a little 42-cent winner from initially taking a 27-cent credit on a broken wing butterfly that also offered some bonus credit today. I took the extra bonus credit, so that net result is a net 42 cents per contract profit. That was a nice little bonus today. I needed price to basically stay above 405, which it did. But since price was dropping today, I was able to get some of that sweet bonus towards the end. Max profit would have been anything below like 407.50 down to the 405 handle. 405 would have been my perfect pin price, which I wasn't necessarily going after that. I was looking to just take the trade on originally for that 27 cents credit. So that's a nice little winner as well. PayPal had a big miss in earnings and did exactly what I needed to do. It's actually below the entire expected move. So had I held on to it all the way to today, I would have grabbed the full dollar profit. Instead, I closed out for partial because we had a nice move. I think I closed it out for like a 30 or 40% gain this week. Yeah, that was good. And then EA was a nice one. We got from a 121 all the way up to 130. That was a nice little winner. Palantir, blew through expectations. We're trading at 113. Did I put anything else on Palantir? I just had the little option play for earnings. I don't think I have anything else running except for a bunch of ratio spreads. Let me check my overall positions here for Palantir. So Palantir, where's it at? Right there. Just a lot of ratio spreads. This is kind of nuts. I had some leaps from last year that are sitting up a bunch of profit. And I've got some ratio spreads that are sitting at a bunch of profit. Right now, overall Palantir is up about $4,000. And I'm just going to let time do its thing. I've got trades that run out another 69 days, another 98 days, another 133 days. These trades are so far out of the money. The out of the money percentage is up into like the 90s on every one of these trades. In fact, all like 99% out of the money percentage, 96, 98. So, I mean, I could justify getting out of the trades. I've got some of these trades up about 82, 87, 94% of my max profit. If it gets up to like 99%, then maybe I can just close them out and move on and take the capital efficiency of not having any money tied up on cash secured puts. But I'm probably going to collect most of the profits. So my open P&L, instead of being 100% obviously of max position, I've got about 87.2% of profit locked in or sitting right now. So it is fine. Not too shabby. Still rolling the SPX. No. We talked about that this morning. The fall today, there's no reason to roll it. I'm just going to keep the puts where they are. The call side is looking a lot better to the downside. So if we go to SPX, you're talking about daily profit play. So I will go into daily profit play. Correct me if I'm wrong. I'm looking at which trade are we talking about here? If you're in my service, what trade are we talking about? I'm going through my trades this week. I was 7 for 8 on one account, 8 for 8 on one account. I rolled the puts up on a few of them. The trade, I'm looking at your 61.15. What are you doing, bro? Are you sure that's the right? Oh, I see. Yeah. The 61.10, 61.15. We should be actually. It's probably looking a heck of a lot better right now, just because the call side came down so much today. So we're at 61.01. Now we're at 60.23. Let me just show that position here. So SPX, we're at the 61.10 by 61.15. 61.10 by 15. And then I rolled the puts to a 57.60.55. So right here. So this is the trade. That is still upside down it's less than $1. I collected a total of $1.65. I'm upside down $2.45. So my net would be about what? 70, 80 cents of risk. And the expected move. So here's my 61.10, 61.15. Because of today's sell-off, it's now trading at like a 33 delta versus like the 46, 47 delta was at today. I don't really want to roll these. I talked about them earlier. Like, I don't want to roll them out for more time. I don't want to have to roll my puts. I mean, I suppose I could roll my puts up, but I'm at a 13 delta, which is exactly where I want them. But I could roll out, and I don't know. Maybe it's worth it. So if I roll, let's see what we can do with the calls. I could maybe go out a week and roll them up a little bit, but obviously more time means more drift. I'm thinking if we have any type of correction, I'd just like to see if February is a correction, honestly. Just like take a look at the market here. Where are we at? Today's market price faded pretty hard. Like, that's a kind of nasty red candle, which is what we've been dealing with the last couple of weeks. gets up towards the highs, pulls back, gets up to the highs, pulls back, gets up to the highs, pulls back. I mean, I was grasping to see like what exactly was causing the sell-off today. The only thing I saw that would be really disruptive would be the University of Michigan posted a higher than expected inflation forecast, which showed like I think it was forecasted at like 3.3%, and they forecasted 1 year out to be 4.3%. So that's way higher inflation. And again, I don't know if that's spot on or accurate because this Truflation reading shows that inflation has actually been going lower, at least in the short term. So we have CPI and PPI data next week. I don't know if the market's going to rip on that. This is what CPI has done. Okay, CPI did this. Let me box this in with a different color. CPI did this before. That's what created this momentum going into the early part of the year. It wasn't like it was a great reading. It just came in about as expected. I mean, we can take a look and see like there's a ton of crap that shows inflation's not really getting better. Okay. But the only three major data points that the market looks at is CPI and PPI, and then the end of month is always this like limping in its PCE and core PCE, which is supposed to be the most important Fed barometer, because that's what their argument is like we're restrictive because core PCE is at 2.8 and the Fed's rate is 4.25, 4.5. So that's calling it a restrictive monetary policy. If we go to inflation data here, okay, the forecast, which I don't have yet, a forecast isn't popping up on any economic calendar, but this is the concern. We are no better off than where we were from summer of 2023. We're over a year and a half away from any improvements. The last time we had a big stretch lower, this thing bottomed in July of 2023, and we're pretty much at the same level. So did we come down a little bit lower? Sure, but we bottomed here in September, and September, October, November, December have all printed higher numbers for inflation. And somehow we're just hanging out right at these all-time highs. And I don't really know how we're doing that. I get it. Like there's a lot of optimism. This market is trying to see like earnings optimism. Companies are still making money. They have some have good forward guidance. Some have bad. I mean, Google missed on earnings. Microsoft was down. Apple's reverted and faded since the earnings plays. I mean, take a look at some of these earnings prints on Mag 7. So if we go Apple, let's just work our way down the list on some of these, giant stocks out there. Apple earnings popped all the way up to 246. It's down $20. Okay. Amazon had earnings today, and it was actually a top and bottom beat, but earnings, price action is down. 90 cents debit. The hell was that just got filled? I think I just got a profit target. Hang on a second. What just got filled? Let me find out here. 62.10, 62.15, 56.55, 95. That was an Iron Condor daily profit play. Let me double check on that bad boy. 62.10. Okay. Those are closing up for 90 cents. Okay. All right. So I closed that one out. Oh, interesting. So I closed out for $1.05. This one now closed out for 90 cents. Let me double check a couple of those. I'm going to check that position elsewhere. I've got it tracked already. That was 62.10 by 15 on the call side, 56 by 55.95 on the put side. That one filled for 90 cents debit. Nice. That was $1.25 down to 90 cents. That's a 35 cents a contract move. Percentage wise, I will take that. Let me make sure a lot of these are already filled and closed. This one here, the 61.60, 61.65, I'm only 20 cents away from my profit target. Yeah, I mean, these are looking okay. They're okay. I'm not saying they're great. They're okay. I would personally, I'd love to close them out by like Monday just to see if the inflation data, doesn't surprise us to the upside, because that would also, again, threaten my call side. But it is defined risk, and I'm kind of sticking to that whole philosophy. Is I don't want to lose on the trades, but I'm about 30 to 40 cents upside down on these trades. It's not the end of the world, So would I mind taking the small winner? I don't really have to budge on them right now. 61.60. Yeah, these trades are okay. So far, they're okay. Here's my call side. Here's current price, and the put side is way out here. So, I mean, I like the deltas on the put side. The deltas on the call side are still a little bit at risk about the 30 delta, but we'd have to have a one standard deviation move to the upside for that to be a threat. So if we have any pressure to the downside, and again, like I have no idea what's going to happen next week, but if we are selling off from this failed high to this failed high to this failed high, I mean, I get it. This was an all-time high in the SPX, right? S&P at new all-time highs, everyone celebrated, but then we had DeepSeek. Then we had tariffs. What's now? What's this? We're breaking this trend line that I talked about on Monday, right? So if we are breaking lower, I mean, technically speaking, is this price going to fall lower? If it does, that helps all of my trades for daily profit play that are out to those like 40, 50, 60 expirations, and we'll have some short-term opportunities next week. I guess the flip side is going into, CPI. This is what happened on the last CPI print, and price ran hard. Do we have the same thing here where it's like, this is our high? Does CPI push the market higher and get all excited again? Maybe. Does this change the entire landscape of what the Fed changed today? I mean, think about how much drama we're seeing with this like stupid Fed stuff, which is pretty typical. But here is a screenshot from today at 10:28 in the morning compared to yesterday, which showed that there'd be 2 cuts this year. Now we're seeing that there's only going to be 1 cut this year. So does inflation that prints next week change the Fed announcement again? Does it change the outlook again? Maybe. Maybe. I don't know. Okay. What is the best way to communicate without being disruptive? I mean, just stay in the chat. This is good. I mean, the Discord is there for everyone to talk. That's the the all-to-all community. Telegram is pretty much my way to communicate to everybody with updates and services and webinars. Discord is where I put all my content in one place. So my Discord channel, free group chat, anything Forex, stocks, options, futures. Anytime I'm live on YouTube, analysis. I blog, my Twitter stuff, any coaching or one-on-one sessions with small groups or individuals, affiliates, and things I've got in the industry for software discounts and things like that, referral codes, whatever. That's all in my Discord. So if you want to, chat with me, then chat with me on Discord. That's probably the best place. But I appreciate the comments here and staying engaged. So when we're live during a YouTube session, I can actually reach out and say, "Hey, Joy, I see your comments there." Right? Gina asking about the video that I posted in Telegram. Are they all super quick? They're out. None of them are super quick. I mean, daily profit play is probably the quickest because that's a day trading service. But waterfall income is, I mean, here are the services you're looking at. So I have daily profit play, which is going to be day-to-day trading. I have waterfall income, which is more swing-based trading and income. I have double up alerts, which is going to be week. We'll put I'll put 1 to 2 week, 1 to 2 week high reward to low risk trades. And then starting, and I guess this is a good transition and segue into this. Starting next week, I'm launching a new service called Newsbreakers. And 1 p.m. Eastern time, I'll be doing a webinar to join. And that's going to be next week. So Monday, the 8th, 9th, 10th? Monday the 10th. That's going to be posted I'll post it in my Telegram channel. I also will have trades will be ready. Education, that would be a strategy guide and video series ready. And also a live class Tuesday at 11:30 a.m. for members. It's members only, and we will be jumping in and pretty much trading for the entire week. So it's a fast start. It's not necessarily quick. It's like that's not really my style. It's like I trade to make money. I don't care if I have to get it done today. I don't care if it takes me a month or two. I don't care if it takes me a year. I'm a short-term, medium-term, long-term trader. I pretty much have a whatever it takes approach. So the nice thing is there's a lot of ways to do it. And so I trade a lot, and I trade pretty small and conservative, but it adds up really nicely over, hundreds and hundreds of thousands of trades. That's what trading is to me. Okay. Anyway, so that's kind of the outline of what I've got. So daily profit play for day to day, I've got a live service for that every single day of the week. Waterfall income, we meet every Monday. Double up alerts is an alert service. This week we were 5 for 7, 5 winners and 2 losses. Newsbreakers will be next week. We'll probably end up doing like a once a week class or a video update every single week that I'm placing trades. And that'll be a service probably looking at like 100, probably 100 to 150 trades a year. Okay. All right. So there's that. Let's see here. All good. Thanks, David. You talking about my Discord? I try to keep it that way. I think Discord is like a potential monster. If you don't keep it organized and clean, it just grows all these like arms and limbs and mutates, and it gets really ugly really fast. So I just want it to be a place where everyone can talk. I can put all my content, and it's just channels, like no subthreads, nothing crazy. It's all out there in the public. So if you want to talk to each other, you want to talk to me, it's easy. I don't get lost in the weeds. I can see comments there every single day. I can post and reply. I always say this as a disclaimer. If you jump into my Discord community, I don't send friend requests and I don't send direct messages. I don't initiate. Okay. So that being said, unfortunately, there's scammers that exist. I posted this in my Telegram channel earlier this week, right here. This one. So these are the channels that you will find me every single day, every single week. YouTube.com/Chris Pulver, YouTube.com/Financial Wars. My Discord channel and server is Chris Pulver Trading. That is the only Discord that I am constantly posting in. Okay. My Twitter handle is Real Chris Pulver. I stream when this goes live. I stream on my Twitter handle. In Instagram, whatever. I'm not really active on Instagram. I scroll and find some funny videos, and that's about it. But I do have a handle. It's Real Chris Pulver. I just don't post a lot on Instagram. Facebook, The Real Chris Pulver. Just because I stream on it. Again, it's like I plug in Facebook and Twitter and Twitch and YouTube and LinkedIn. They all post at the same time when I go live for videos like this. All right. And then my Telegram is Chris Pulver. Like that is it. So if you're getting, exterior or external channels and you think that I'm out there somewhere else, I'm not. This is where I'm at. Right. So if you want to follow me, this is where I'm at. And if you have any questions on these, this is where you should ask me. Because if it's outside of these or my personal email, it's not me. All right. So I just want to make that very clear because unfortunately, I've been doing this for 10 plus years and I've been helping traders and I've been in trading rooms and running services. And I know that there's a lot of phonies and scammers and impersonators. And unfortunately, I hear about it too frequently, but it's like, Chris, I was having a conversation with you for like weeks. And then you asked me about crypto. And it's like, right. And why did you know that it wasn't me? Because I'm never going to do that, So anyway, just saying. But that's where I'm at. Okay. Please post your Discord link every day for followers to not get scammed. Sure, but the reality is, I want to post. I mean, I'm careful about posting this stuff on YouTube. I will post a 1-day link. That's what So anytime I'm live like this, I'll post like a 1-day link. So that way it's good for the next 24 hours. But in my Discord channel, I don't have scammers in my community. What happens is they just lurk in the background and they impersonate me in direct messages. So here's what I do every single week. I will go into my settings, okay, and I'll go to all my members here, and I will search for any type of phony. So right now I have 2 impersonators right here. This is really me. This is really me, okay? 2 years ago, when I created my Discord community, it is right here. You can see it's so easy. There's an underscore and a period. There's a number after my name. It's not me, okay? So I'm going to delete, and I'm going to ban this person forever because it's a spam account. So they are done. This one with an underscore and a period, that is not me. I'm going to ban them. This is about the most I can do to just keep the integrity of my channel. I ask you to do the same. I have a scammers that you can post anytime you see impersonators, post it here in my thread. Share it in the free group chat, right? Or just kick them, flag them, ban them, because I obviously don't want them talking to anybody because it's just a bunch of crap, right? All right. So that's that. Anyway, we good? So that's the best place to find me. And again, if you come here live and you see me in the YouTube channel, you can ask questions here. I'll address questions here. I'm talking live, right? So it's not hard to find me. That's what's so funny. It's like I don't know how scammers ever win if you just use common sense and just follow me live, because I'm live all the time. Typically like 3 to 5 sessions a day. I don't know why anybody would follow me outside of these channels or think it's me elsewhere. It's not. All right. Anyway, enough about that. Let's talk markets. Okay, and there you go. No, well, yeah, that's fair. Gina says nobody can impersonate how fast I talk. Yeah, it's funny. I've listened to myself at like a 1.25 speed before, and it's pretty fast. I get it. I've heard traders also, they slow me down to like a 0.75 or a 0.5 speed so they can actually keep up with my pace. So anyway, funny stuff. Do I sleep? Yep, I typically sleep in really nicely on Saturdays and Sundays. That's usually my catch up. Otherwise, I'm good with like a little like probably 5 hour block on the week. Like, it's not a lot, but it's enough. I am I've got a bit of market adrenaline, I suppose, all the time. So, but I say that and it's like my heart rate's like 50 beats a minute. So even though it sounds like I've got all this energy enthusiasm, I don't drink caffeine, and this is just what I enjoy talking about, and this is what I enjoy doing. So that being said, it's just I'm busy, but that's good, right? Okay. Anyway, where are we at? SPX down 0.96% today, fading off the highs once again. Technically speaking, I could go ahead and connect the dots on these highs and say, I mean, and I don't want to make this like some Frankenstein technical analysis, but I talked about this earlier in the week. Would everyone understand that if I just connected these lows right here and connected these recent highs, that this could be a potential channel, right? It's very possible. Like this market could be either sideways this way, right? Or it could be now sideways this way, where it still goes up a little bit. I mean, if I see this happening, like this would almost be a little bit more concerning. If we break these highs, I mean, there is a decent level of resistance here. So let's just say that we break the highs, okay? If the market gets excited enough to break these highs and sustain this close, then we're in open space to the upside. And this will be the bull market that everyone's been, just bidding for the last couple of months and hoping we're just going to hit new highs and keep making new highs. The concern that I have is that right now we poke the high and fail, poke the high and fail, poke the high and fail. So I could see this coming right back into the middle. I could see this coming down and basically being a range trade where we're not breaking new highs right now and we're not necessarily taking out the election gap low. So this to me is an important low. This to me is an important high, and I will continue to trade in the middle. I will continue to trade with a wide margin for error down here and look at some income trades. If we go higher, okay, totally fine. If we go in the middle, then I'm looking to take profit on either side, or I'm just going to build positions off these lows and stay out of the way and just generate, if I can generate an extra couple of dollars a week per contract, it's fine. And I'll keep doing that until I've got a better opportunity to be long how I want to get long. Okay. So I'm just going to keep an eye on things. And yes, we have data next week that could be a major mover and major catalyst with the CPI PPI combo on Wednesday, Thursday. Markets today, I mean, we obviously had a sell-off. The S&P down nearly 1%. NASDAQ down over 1.3. Dow's down almost 1%. Russell down over 1%, 1.25. We got the VIX one day up about 6 to 7% today. The VIX 30 days up almost 6%. Dollar got a little bit stronger today. Oil is dropping. Oil futures slightly lower. I ended up taking an iron condor on oil around the 72 handle. As long as we stay above 65, I'll be fine. I'm just going to give that one some more time. I think there's another maybe 30 days on this trade. Natural gas, I'm still long. This one goes out to a diagonal spread out to 2027. So gold. All right, gold was up to some fresh highs today, and we're fading. Silver was up to some fresh highs today. We are fading. Interesting. Bitcoin fading. I think there's still some strong support at 90K and 80K on Bitcoin. Obviously with some risk off tones. I'm not surprised the market is selling off a little bit. MicroStrategy down to 332. Coinbase has earnings next week. Ethereum, I'm going to stay out of it for right now. This is probably a pretty clean trend line to look for on Ethereum. If you want to get long Ethereum, that's probably a good trend line to wait for a break, or look to kind of build support up in here, right? Build support in here. maybe some more accumulation, but I'd say the safest trade is right side of the trend line to see if it ranges. So we'd have a low right here and then resistance up above. Let's see here. Copper had a huge run. This is crazy. I think a lot of this is due to China. So China ripping higher, or not? Nah, ripping's a little bit exaggerative. I would say China is looking better to move higher. I think China is well positioned for a bit more bullishness, which I think is totally fine. I also think that kind of keeps a resiliency into the global economy, where if things are looking, fine and stable for the U.S., but not necessarily crazy bullish or crazy bearish, the U.S. is just going to kind of exist out there. But things that we've had really extremes on. The U.S. market has outperformed like every other non-U.S. market by like 3 standard deviations. And I think that's over like the last maybe 10 to 15 years. That is like the biggest on record. Okay. So I do think that money going from US to non-US, I mean, it's going to depend on the dollar. If the dollar gets stronger, we're probably flowing from US to non-US, just because it's going to make it harder. It's going to cap growth a little bit. If our yields are going higher in the US, that's also going to be a problem. But anyway, I mean, non-US growth is potential, right? So like Europe doing well this year, the DAX is up and actually outperforming since the lows in August last year. The DAX is up like another 10%. FTSE outperforming the S&P as well. Same thing, August lows to now. Anyway, copper. And I said this going into that September rip. When September moved aggressively and copper did the same thing, I mean, I know that there's been a big factor of like China movement is linked to copper pretty closely, but copper is also kind of a good gauge for global economy. And I like the technicals here. I mean, if copper comes up here with a rip and a bit of a bull flag, I think there's some trends. I think copper looks pretty promising. I am going to look for a pullback. So if we have a bear flag of some sort, I'll look to establish some type of long position. I may, instead of getting my copper futures trades down here, I might look at a trade right there. So let me actually take a peek at that right now. Anything around like 4.18. Okay, now I don't know if this is going to be a good reward to risk profile. That's why I didn't trade copper in the last like 30 to 45 days. But let me take a look here and see if I like copper. So I could go out 47 days to March. That's not bad. I could go out 76 days. I mean, I think going through like this like 2 or 3 month window of Chinese New Year, I probably think April's a smarter trade. The 4.18 handle is what I'm looking for here below this low. Let me see if I can put a defined risk trade on. 4.18. Okay, so if I buy, sell, that's a good chunk of income. Now I need to turn this down a little bit. That would pull in $600 of income. I need to go and define this a little bit more. I can still pull in credit here. That is not a bad trade at all. Let me see. Move this down for a little bit more risk. 60 bucks. 90 bucks. I mean, damn, futures, this is expensive. I don't want to take on much more risk than about $1,000 here. So that's $1,100 risk. This should be about $100 to $130. Yep. So 120 would be my profit on this one. It's out 76 days. I mean, my max loss is $1,000. I don't think it's an awful trade. Let me see here. I mean, the better trade would be I don't do anything and I just keep. This would be a profit of around $600. I could roll this. So this would be my bear. Let me see if I can do this. Let me play around with this. Now, the risk side of copper, this is why I have to have something more defined risk. Let me see if I can go up a strike to 418. That would pay me about $700. So 418 to 412 pays me $120. That's not a bad trade. Buying power only requires about $520 in futures. My max loss is around $1,000, which is less than 1%. That's not a bad trade if I spread it out more. 144. Now my risk grows a little bit higher. Let me go like maybe $1,500 here. 170. So it's not bad. Buying power wise, $672. Max loss $1,500. I don't think this trade is awful. It's well outside the expected move. We've got an 84% chance of profit. On time decay, I get about $2.50 a day. My max profit would be a trap. If we end up dropping back to this 418 level, there's a profit trap right there, which means price would have to drop. Okay, price would have to drop down to here. So, I mean, this is a pretty convincing break. I don't know if I'm getting the best fill necessarily. I wanted, like the style of trade I'm looking at right now, I wanted to take it if price were to stay in here. I wanted to take it just below this area. But now that we've made a nice convincing break, I mean, it's just like anything else. There's risk in the trade. But this low is 4.18, okay? So that would be where I would take on potential risk, but my max risk is about $1,500. Now, if I do this trade as is, I would walk away with about $170 net profit on this trade, and I have a potential profit trap of around $437 if price comes back to 4.2 or 4.19. Now it's out 76 days. The reason I like this trade is if China continues to show, lifting animal spirit, supporting the capital markets and supporting the property markets, then copper probably continues to go. Demand-wise, if we are building homes, if we're adding, I would imagine like improving the energy grid or telecommunications, copper is everywhere, big in homes, big in cars, and copper is in high demand. So does that drive prices up? Maybe. So anyway, I mean, it's just a trade. I'd like to see if I can get filled. I mean, the bid ask is a little wider. Maybe I can get filled at slightly higher, but I'd accept this trade as is. It doesn't take a lot of buying power. So I'm going to take this trade and see what it's going to cost me here. So 0.075. It's not filling. 0.07. Oh, no. 0.070. Now it's 150. It's 160. All right. This is right below the mid price. Okay. So right below the mid price, 0.070. That'd give me about $160 income. See if this trade will fill. This can't be right. This shows 0 commissions and estimated fees. That can't be right, but maybe I should hold Tasty Trade accountable and say, hey, man, it said 0 commissions on that trade. It's probably going to be like $10 a commission, roughly. Let me see if this will fill at 0.070. Got filled at 0.070. Okay, so I'm in. Okay, next account. Getting filled. All right, this is good. I'm going to take this trade. Okay, let's go. $9,072. Let's do this one here. Okay. Um, 336. All right. And this account. And then one more. I think that is it. I don't know if I could do it. I don't think this one has, this is a cash account that I don't think has futures. Yep. Okay. So here's the trade. I'm going to put this in my personal tracker. That's always important. So let me go in and track. So /HG. So April 24, buy a 4.2 put, sell a 4.19 put, sell a 4.18 put. And then to define that risk, I went to a 4.1. That's a buy 4.1, so it's a little bit wider. 4.10 put. So 070 credit, which translates into about $160 net credit. And then I have a profit trap on there about $425. Okay, $425 on the profit trap. and max risk is 1575, and I've got an 86% chance of profit. Okay. All right, so that trade is in. Let's see, 4.20, 4.19, 4.18, 4.10, 0.070 credit, 160 per contract. So that is my trade, and this is my area right there. So as long as copper stays above that, I'm looking pretty good for profit. All right. So like I said, up a little bull flag is fine. Up and more momentum makes this even better. But let's see what happens. Would FCX be a good proxy for futures? It's just going to trade way differently. I mean, FCX is a stock, right? So FCX, I've watched this for a while. I think FCX is a great trade, but it's a producer, distributor, miner essentially, or it's like this doesn't trade like the spot price of copper. This would be the same as saying, like, do I buy GDX, the gold miners, versus buying the spot price of gold? To me, I'd rather do the spot price of silver or copper. That's why I'd rather trade futures. So if I'm going to buy FCX, I'd rather have this price be down here. If we're going lower, I'd love to see that as a spot where I can, pick this thing up around $26 and take it back to 40, take it back up here towards 55 or 56. Copper's not the only thing that they play. Like, copper is part of it. Non-energy, what else do they do? So FCX, let me go to, where's my fundamentals here? So, I mean, price to earnings actually pretty expensive for like a value play. But current price at $38 and fair value 66. I mean, showing good potential. I just think the premiums are so terrible. Like, if I said, okay, hey, I wouldn't mind owning this at like $30. I wouldn't mind doing something out here for $30. I could look at it, but spot price wise, like, you're not going to get the same reaction or correlation that you would just trading copper futures. COPX. Again, it's a miner. Like, this actually looks a little bit better. So Global X Copper Miner, a little bit better. Okay. But still, I mean, this is a red candle versus copper is bullish. So I want to trade the spot price that looks to me a lot more bullish than that. Looks okay, but we're not breaking any major structure right here, right? We're not breaking that structure. We're not even breaking that structure. If you go to copper's broken all that, right? So looks a little bit different. Simply Wall Street. Okay. All right. Let me check on FCX for a moment. I played that quite a bit during COVID. Let me go out. I mean, I'm curious, like, what an end of the year, like December, January, do we have something in the 30s? I mean, I wouldn't mind taking some hold of copper. Let's go back to FCX. Something in copper around the 30 to 25 zone, maybe accumulated some shares. That's not a bad spot going out to January. If I did a 30 and 28, so I collect $3 of income. Yeah, I sit on it like a cash secured put. Would I be willing to own some shares there? You bet. So could I take on 200 shares? Sure. The break even would be at $29. I also collect another $1.50, $1.60 off of that. So that would be, I mean, break even wise, I'm willing to take this trade. 30 plus 28 divided by 2, break even is 29. And then 317 divided by 2 minus 29. So I'd own shares at 27.41. And 27.41 is right back here towards the July 2022 lows. It's obviously way worse if we came down to COVID levels, but it's going to be interesting. So I don't know. I mean, if copper prices go higher, I would like to think that FCX can be a, this is a midpoint we've been trading in now for the last couple of years. I'd like to think that they're going to do better if copper's up. But to stay out of the way, this might be a trade that, I sell a $30 put and I sell a $28 put. And what's the result? No assignment, and I just keep the $300 of income per contract. That's not bad. So I don't mind that trade. The issue that I would have with the option trades would be, we've got a decent amount of expirations. The premiums, if I had to repair this stock going out like 30 days, it's not a super high premium. And at the money, getting about $1.50. So $1.50 out of a $38 stock. It's about a 4% premium. It's not very high. So, you'd have to be comfortable like owning that inventory for probably 30 to 60 days to kind of work your cost basis, right? But I don't mind the trade. I think that area, we're talking about owning this thing at that 3 to 4 year lows. Yeah, I don't know. I'll take the trade. It's fine, right? Like this trade out to January, it's essentially like a leap. It's very close to it. That quickly declined. 317 now to 290. Who took that trade? Who took my fill? They have micro copper now. Yeah, that's good. Same thing. You could do what is it? MCG. Micro crude light. What's the symbol? I don't know if I have it in Tasty here. Usually micro, is it micro MH? There it is, micro copper. I don't have options on it though. That's annoying. Yeah, I'm only trading options. I'm not going to trade just the long, long futures contracts. I'm trading options. So anyway, all right, FCX. If I went out to January 30 and 28, I could, for good measure, I could throw in the 25. Now I get almost $4 of credit. There's about an 80% chance of profit on this. It's at the lower end of the expected move. But let me see something here. Maybe I do a little ratio spread like that and see where I could own this thing. That's actually worse. Never mind. So a 111 gets me 27 cents with a bear trap. I would own it at 28 minus the 27 cents. It's about the same price. I want more credit, so I'm going to do the puts instead. $30 I think is a good starting point. 28, 25. So I get, and again, these are all the bid prices. So let's see what the bid prices add up to be. 0.72 plus 94 plus 131. That's a ridiculous premium. 297 is the bid price. If I somehow get this thing for like 325, 350, that's okay. But I do have to be willing to own it. That'd be ownership of 20, what? If I have 100 shares, 30 and 28 and 25, 27 and change, and then I split it. It depends on the fill, but I'd probably own the shares around like $26 or $27, which again is sitting here near around 2 to 3 year lows. So this goes back to 2021, really strong support here in 2022, back in the midpoint. The nice thing is we're sitting at this yearly 5-period moving average. I could see FCX just being in a longer range as well. So I don't mind taking the shares. I think there's some pretty good upside, especially if we have a value play. All right, anyway, I'm going to take the trade. Stop freaking talking about it. I like the trade. Let me see what I can get filled for. I'm going to try 350. That's a very generous fill, but I'm going to try 350. And that would be 300 shares. That's going to tie up, if I do a break even around 28 times 300, it's going to be about $8,400 in cash. So I'll probably put this in my portfolio margin accounts. That filled at 368. Solid. I'm going to go same trade here. All right. Next account. Filled. 9111. Filled. And 3 right there. And also we got one other account. This one here. Filled. Cool. All right. That's a trade on FCX. FCX. So I'm doing a January 16 of 2026. Selling the 30 put. selling the 28 put and selling the 25 put, $3.68 credit. Willing to own. The break even on ownership would be $3.68 was my fill. So I could take $1.22 off of the price. $1.22 off the price. So break even if I took any ownership of all three positions, it'd be $26.44. Break even if assigned at all levels. Okay, it's not a bad trade. So, I mean, yes, it's out a lot of time. If I watch this one and see it at like an 85 or 90% profit target, so max profit is $368, right? If I do one contract, that's my max profit. If I see this thing trading for, $310, $320, and I'm looking at like 80 to 90% of the max profit rather than sitting longer in the trade just to grab that extra 50, 60 bucks at the end, I'll probably just take the majority of the profit and move on. So I will keep an eye on that one. And it's pretty simple to check this. Like when I'm looking at my positions here, I go to my positions tab in my platform and I go to FCX. Over here where it shows P&L open percent, if this is at like 90% or 85%, that just shows that I have taken most of the profit out of the trade. Okay. So not too shabby when it comes to that. So let me double check one thing here. AMD, we're trading. I'm taking a small loss on AMD. It's not below 105, so there's no risk of assignment there. It's not in between. It's just going to be a worthless trade. And then CMG, this one, I think in this is my earnings trade right here, CMG, 1, 2, 3, 4. I think I have to close this trade out. I probably don't actually. It's just going to be worthless, but I mean, I guess I'll get a 1 cent credit out of this. Hooray. Can I close it out for nothing? They're just debit spreads. There's no assignment risk here. It's just worthless. But that was a annoying trade. I mean, Chipotle went like literally nowhere, so that one sucked. But whatever. I lost $200. No big deal. Okay, so I don't have to close that. Those trades are going to expire worthless. Those are the only two losses. CMG and AMD are the only two losses this week. Everything else was pretty solid. Yeah, I lost 100% too. I lost 100% on that position, but that position cost me $200, and then I'm up, whatever. This week P&L, I mean, winners on SPY. I mean, I have 15 winners for profit, and I've got 2 losses. So, when I lose, I lose. When I win, I win. I usually win a lot more than I lose, and I just keep trading. So I think the one thing that I just want to make sure traders do is don't ever over leverage. Like one trade, one position is just one trade, one position. Nobody should be taking these huge hits and these huge like swings for the fences just because I post a trade in my service. I'm trading so conservative just because I'm going to trade. The best way for me to make money is to survive and just have lots of trades over lots of time and make money in the long run. And that adds up pretty nicely year over year. It's not like I'm some crazy conservative trader. I do pretty well. But the point is, a loss is a loss, and I just don't care. It's like I hate losing, but when it happens, it doesn't affect me any more than a win. So I would say I can get annoyed at certain trades, like I don't know, like Netflix, for example. If Netflix breaks above 1040, I'm going to be annoyed with Netflix because I thought that was a pretty good mechanical trade after earnings, after this pop to the upside. And, I've got this thing pinned at 1040. I'm hoping this trade for the next, this is at the end of the month, I believe. And I mean, I like the trade mechanics. So Netflix is right here. So, I mean, the trade itself is upside down, but it's going to be managed by the end of the month. I need price to basically stay below 1030 or stay below 1040. 1040 would be great because I'd have like $1,000 profit trap in this one. So if I show you what this trade looks like, this trade would annoy me just because why did the stock not go down at all, right? So this is what the trade looks like. If Netflix goes down, okay, if Netflix goes down, then I keep all of the income from my trade. If Netflix goes up just a little bit more into my profit trap, I have about an $11 profit there. So I either make $100 or I make $1,100 or I take on a risk of about $900. I think that's a fair trade. Obviously, my higher probability is keeping the $100. My profit trap would be lovely. I just don't know if I'm going to get it. Okay. So anyway, just a trade. All right, and by the last minute, so as we're in the final minute today, I had a bunch of pending orders today that didn't get filled. So my daily profit play, I had pending orders here. This one did not get filled. This one didn't get filled. I tried to get something. Price was down, 1%. I was trying to, a lot of bells there. I tried to stay out of the way, and I just didn't want to throw in. I mean, there was plenty of opportunity to grab, 30, 40 cents right up here for I was like, okay, the last hour I can grab something right here. Now I will check on this trade. This trade, son of a biscuit. Did I get dinged on all these? Oh my gosh. Like down about $100 there, down about $90 there. You got to be freaking kidding me, dude. And this one, let me zoom in. Why does this look like garbage? There you go. This one dinged. Crikey. It's about a $250. Well, that's on me. So the three combined, a little Quasimodo, took a hit of about $228. All right, I let those cash settle. Can't believe I didn't make $1 on that thing. Yesterday I made like $600. Whatever. Price be slippery, man. All right. Anyway, this is what the day looked like. We had that huge move right at 10 o'clock. I mean, we were in live session during daily profit play. We had that huge move. One of my members, Omar, had a 0DT put on there and crushed it for like $1,300. That stayed bearish all day. The nice thing is for some of my trades, like the higher duration daily profit plays, we're now like kind of recentered on things, going into the technicals of where this market may be going. It's like, I don't know what's going to happen next week, but there's something kind of interesting about this being almost exactly like the last couple of weeks of trading is we go up, we fade, we go up, we fade, we go up. The question, of course, is like, are we fading that or are we breaking higher? I don't know. I don't think anything gets fixed right here. The only way that I see this market going higher with momentum is if inflation next week comes in dramatically lower and the market loves it. Okay? And the market has to love it so much that we'd almost have to gap to new highs. Because if we don't, I don't think the Fed's plan for this year is going to change at all. I don't think the Fed is going to change anything. So they're going to sit with maybe one cut this year, and that's it. And you're looking here at the 10-year yield that has turned, at least put the brakes on a little bit to the downside. So we had a nice little relief of about 30 to 40 basis points. And where's my 10-year at? 30 to 40 basis points. So the 10-year is up a little bit, but from this recent top around 4.8, we dropped about 41 basis points. Now we're up to about 32. So we've had a little relief, but anything around that 4.5 to 5% is no fun. Like, I mean, even JP Morgan in their state of the markets, they have this big quarterly report. This 4.5 to 5% yield is basically the governor or the emergency brake on all things growth. It's the governor, the emergency brake, and all things financing. All debt restructuring, all mortgage rates, all 5, 15, 30-year borrowing is going to be sitting here at like 5.5, 6%, if not higher. Mortgage rates are nearly 7%. So the yields have done the opposite of what the Fed rate policy has done, and that is uncharted territory. So I'm not doom and gloom, but it's hard for me to say like this thing has all the momentum to crank higher. This is a little bit more concerning on the technical side of where we closed today. We took out this like climbing up and getting back to fill this gap. We're now back below it. So the week actually finished negative. We finished right back. This is a lot of volatility. This is where we started from Friday's close. This is where we finished the week. We went down a bunch, we went up a bunch, and we settled back in right in the middle. So next week, buckle up. We going higher, we going lower. Your guess is as good as mine. I'm just going to try to survive. Okay. All right. Do you use pending orders on bar close? No. I use pending order on like limit fills. Like on what trade? If I do a limit order, like I got filled today on Tesla, I finally got filled at the 362.50 level. So I finally got filled. 362.50 got filled. So I did a little dollar allocation. We're at 361. So I got a partial position there, and this one's still pending. So I'm going to scoop up some Tesla. And again, it might be early, and I could see this falling. I mean, this technically would be a nice little symmetry play. So we have a high to low and a lower high to lower low. So I mean, I could see Tesla dropping to like 325 or so, maybe even coming back into this like post-election gap where this thing ripped up like 80%. But I would say around like the 275 to 250 area, Tesla looks pretty attractive. They've already had earnings, so I don't know if it's just going to be like more of a sentiment play now. Anything on Doge that affects Tesla because of Elon Musk being associated with it, I don't know. But I think, medium to longer term, I think Tesla's overall, like, it's an energy company, it's an AI play, it's a profit play. So I like it. I'm just going to start building in small. So, all right, we'll see. So, all right, I'm going to go. I am looking forward to being with all you next week. So just a couple final announcements here. Thanks for posting that for me, Sean, or whoever did that. So I mentioned next week on Monday, Newsbreakers going live. That's going to be a webinar at 1 p.m. Eastern time. I'm also going to be having trades ready. I'm probably going to have at least one trade ready for Monday, and then Tuesday we have a class at 11:30. So piggybacking off of that Monday session. So if you're interested in trading, news catalysts with me, if you're interested in trading earnings with me, that's the course. That's the course to do it. And Tuesday is going to be a busy class because we're going to price out a bunch of plays together. And there's about 10 stocks I'm looking at for next week. I took a screenshot of here somewhere. There. These are the trades I'm looking at next week. Shopify, Zillow, Cisco, MGM, Alibaba, Airbnb, Coinbase, DraftKings, Palo Alto, and Win. Those are the 10 I like. So there could be other ones, Coca-Cola. I mean, there's obviously a bunch of stocks next week. There's probably like 800 or 900 earnings next week, but I'm interested in what's liquid and what's likely going to calculate out to move the way I want it to move. Okay. Do you look at New Zealand one? No. I mean, yen pairs are my least favorite. So New Zealand yen. I look. I could do this in one chart, right? All the yen pairs are pretty much doing the same thing. Aussie yen looks like New Zealand yen. Euro yen looks like pound yen. Dollar yen is kind of its own little island, but I don't know if it's going to be dollar stronger or yen stronger. I think right now, because of this big disruption we had from July to August, every yen cross right now, could this be setting up for more selling? Okay, maybe. And the reason I say that is because if we're going to see equities going up, we are probably going to see the JPY fake out at this bottom and bounce. So there's extremely strong support, right here at that flash crash low, and we have just nothing but a monster range. The concern would be this: if we go high to low and we're setting up some type of topping pattern here where this is a high, low, is this a lower high? And are we going to push and project to a lower low? Well, if that is the case, I don't see how there's any way that if this comes to fruition, I don't see how there's any way that the stock market goes higher. If the Japanese yen gets stronger and we continue to see more of what looks to be like a JPY deleveraging, stock market sells off. So does that happen? That's the huge question mark. Could I see it happen? Sure. But we'd have to have a pretty convincing sell-off in the stock market and the Japanese yen gets stronger as a result. Versus the stock market stays really choppy and just lingers near these all-time highs. I don't see the Japanese yen getting too much more bearish. There's just really strong support. Like if that's a bear trap or if this is support off of the the flash crash low. I mean, I just think this thing is going to stay in a range from a monster low to a monster high, and traders that are looking to attack that would be looking for any type of short-term bullishness around this handle. If they get short-term bullishness, tight stop losses, there's tons of upside potential, right? Let's take a look at dollar yen. Dollar yen, like I said, looks different. So as I mentioned in dollar yen before, is this a high to low? Is this starting to form what could be a break of structure for a breakout here that would stack up for another sell-off? Like, I'm willing to take that trade, stack my sell stop orders. I'm also willing to see if the JPY gets stronger. This is why I am in FXY to the upside. We're sitting at a 200 moving average. I'm also in 6J to the upside. It's 6J is Japanese yen futures. Okay. So, I mean, this is how I'm playing the game with Japanese yen. I just don't want to trade currencies unless I'm very, very clear on the overall analysis. So my Swiss yen is looking a little bit better. I just have one swing trade in. It's looking fine. I should probably, actually, this isn't a bad spot to take some profit. I measured symmetry. It may get there. I think I'm just going to take some profit. I'm up 178 bucks on that. It was a small position, but it's working out just fine. I'm going to take profit. So that trade pip wise is up around 560 pips. Closing. All right, I just closed that out for 560 pips. Hooray. And to me, it's good enough. I don't care what the Swiss yen does at this point. I'll take the trade. Okay, symmetry's right there. We're back to these lows. It's good enough. Okay. Over the weekend, if we see like a crazy amount of Japanese yen movement on Sunday to Monday, we might be looking at something very similar to what we saw, last July to August when the Japanese yen was deleveraging and the markets were moving. We had these monster gaps. Look, just buckle up, man. There's like so much wild stuff that could happen. And what we are seeing these last couple weekends is the market is at the most vulnerable over the weekends. Okay. Now, does that mean that I never hold weekend positions? Of course not. I've got freaking millions of dollars running over the weekends. But what it means is I have defined risk for a reason. Undefined risk can be subject to all sorts of crazy stuff. So even if I'm willing to take, $1,000 or $2,000 of risk on these positions, I have it defined where the market can go to zero, the market can go to infinity, and I've got a risk reward that's already established. So again, I don't know how much wild and crazy stuff or shenanigans we're going to have over the weekend. I don't know this weekend. Last weekend wasn't a surprise. I kind of called this on Friday when we were talking tariffs here. I said, look out for a potential gap lower on Sunday. Well, that's what happened because futures dropped a ton. DeepSeek, I think, caught everyone off guard, but it showed how, buy the dip mentality, what like the market is still like buy the dip, buy the dip, buy the dip. This might put a little bit of headwinds in the market to say, look, job numbers were pretty solid. Earnings consensus is moderate. I wouldn't say it's fantastic, but it's moderate. But you can see that prices are sliding, right? Apple gapped up higher. Now it's failing. Microsoft is down. Google is down. Meta hit highs, but it's fading. Netflix hit highs, but it's fading. We'll see. Amazon's down. It's like you've got some big market cap companies that are showing price action going lower. And I think that's just going to weigh. Like you got market cap weighted stocks. So it's going to be hard, right? Equal weighted down way less. 0.49 equal weight versus 0.92 market cap weight. It's a big difference. But that's when you have like the heavy concentrated house of cards where it's like, yeah, if we have Mag 7 showing downward prices, it's probably going to pull the indexes with them. Okay. All right, I'm going to let you go. Have a great weekend. Have a great Friday. Enjoy the Super Bowl. I'll see you on Monday. All right, thanks. Bye.